If you're buying or selling in Southwest Florida, this is a market update you cannot ignore. Lee County demand just hit its second worst December in 40 years. Inventory is quietly rising, and builder supply is surging again. Despite headlines telling you now is the right time to buy a home, today I'm going to break down the truth and the data so that you can be a more educated buyer and seller out there. I'm going to break down the 2019 versus peak versus current prices, why the market is not stable, and what falling pending sales for December mean for 2026, especially for next month, January, and the hard truth for you sellers out there of how much COVID equity you're losing, how fast it's disappearing. My name's Ed Zoller. I've been a real estate agent here for 25 years. I've been helping buyers and sellers and educate them so that you can navigate this crazy market we're in. Let's get right to the data. We're going to start with supply. Supply kind of creeped a little bit. It was kind of negligible. It wasn't even a percent. It did go up a little bit. So that is an upward trend. We were expecting this trend. As you can see from these other graphs, you can see the trend always goes up. And when does it peak? It peaks out in March. And then it goes all the way back down to January. And then it peaks again and peaks again. And then, of course, COVID, this slop right here, we didn't have any inventory at all in Southwest Florida, made our prices soar. And then now we're kind of getting back on track with these steep mountains. I do expect inventory to kind of start skyrocketing. Remember, we got January, February, and March for it to hit its peak, and it is already starting at a very high level right here compared to these other ones that were always leveling out at 8,000 and going up to 11,000, about a 3,000 increase in inventory. Well, we're starting out at our bottom at over 10,000 homes, making our way to probably 14,000, getting back up to this level that we had in beginning of this year. Of the inventory that we do have only 18% of the inventory is new construction. But what's going to be funny about the demand is that a third of the buyers are buying new construction because of the massive incentives and price cuts that they are doing. So when you look at these kind of graphs, what I expect is for history to repeat itself. It's going to go up, it's going to go down, and it's going to follow this same path as it started doing in 2024. Not quite as big a peak, but I think we're going to get back into this. We're going to see 14,000 homes here shortly, and more inventory means better buyers power. I am going to start adding in, because it's the end of the year, Happy New Year, and also Happy Holidays to those of you. I'm going to start including some Florida stats as well, and I do want to show you something, and this is comes from the Reventure app, showing the inventory that Florida has, and I want you to see something here. Obviously, 2021, Florida had very next to nothing. That's when everyone kind of had their peak and prices were soaring. But right now, Florida ranks the #1 state with the most inventory of 163,000 things for sale in inventory. And some people will say, well, Florida's a big state, Ed. Yeah, so's Texas. They're second at 131,000, but so is California, which I spelt wrong here, with not even a close third place at 66,000 in inventory for the entire state. That is a huge change from 2021. And when you start seeing articles and newspaper headlines talking about tightening inventory, you can kind of look at this and say, well, not in Florida, it isn't. We do have delistings is what the new news that's out there. There's a bunch of articles that came out in the last month or so talking about all the sellers giving up. Hey, I can't get my price. I'm just going to take it off the market. And that's a good thing. We need these overpriced sellers getting off the market, making our inventory go down. But you can see here a little bit of uptick that we had. 1,400 homes left the market without selling, yet we still had an increase in inventory. Imagine if they didn't pull themselves from the market. The funny thing about this is that of this 1,401 homes, 156 were new construction, but only 11 were national builders. And catch this, 10 of those 11 was a builder called LGI. Why would a builder give up on a house that they're trying to sell? Well, a lot of cases they might sell them for really, really cheap, and they do not want that data recorded freely on Zillow. It'll be in the public records, but hard for buyers to see that kind of sale. But also, they've been sitting on the market too long, and they expire after a year of not selling. This shows you how much building inventory these builders are having on that. So again, it's what our market needs. We need houses to delist, and you can see, and I want to point out because I'm going to go over an article that I saw of how much decline the delistings have done, where sellers are giving up this huge amount, but how this number has been dropping. Of course, it just went up in December, but let's get to that one. Redfin came out with their article, and look at this headline, guys. Home sellers retreat with supply posting biggest decline since 2023. Yeah, okay. So biggest decline for this. Obviously, they wrote this in December 22nd, so they didn't really do our stats. And they also did all of Florida, that we had a little increase here. But it makes that headline sound like the home sellers are retreating and the inventory is disappearing and buyers should have a little maybe FOMO going on. But they do say in it that, and I put a quote here, both buyers and sellers have been retreating from the housing market, but buyers have backed off faster for the last couple of years. As a result, sellers outnumber buyers, which means buyers who are in the market hold negotiating power. How many months of inventory do we have, guys? I haven't done that graph in a while. Over 12 months of inventory if we continue with the rate we're going. So kind of saying that buyers have, sellers have outnumbered buyers. It's a huge amount of that. So either way, the article was good, but I hate the headline. I hate the headline because it makes buyers think. They see the headline, they don't read the article, they don't see this kind of thing. But, when you read these articles, I kind of say, hey, guys, you've been following me month by month. Does it sound familiar? But these are kind of articles that just drive me crazy. And then this one. Fortune had news that came out in October, and this just made me cringe. Read this real quick. Florida housing market was skewed wildly by the pandemic. It's finally coming to grips with a realistic middle ground. What middle ground is she talking about? No idea. There was a quote, rampant delistings and fewer new listings. Well, that's kind of a lie because we kind of saw that with Florida. What delistings? Where did it delist? Less new listings and all these delistings going on. They talk about the inventory as tightening. That's not tightening when you have this going on. That's not tightening, that's loosening inventory. And then said buyers will lose a little bit of that leverage they had and sellers could regain a little power. No, not when you start looking at these kind of stats. The person they were quoting in this article, obviously they were one-sided on this, and you're going to see this from National Association of Realtors, Redfin and Zillow. These are real estate companies. Fortune is not, but I just figured this is kind of swayed towards, oh my God, buyers, come back please and start buying homes. Please, please, please. Even the realtor said, it is not a crash in Florida, but a reset. Could we not call 2006 a reset as well? A correction? Or just call it for what it was. It was a real estate crash. The biggest real estate crash we ever had. Let's talk about demand. Now, there's some positive stuff with this. As you can see, the demand is still stuck in my channel. Now, I made a new purple line kind of showing roughly the middle. But for those of you who haven't seen my graphs before, sales obviously went down to 909. See our long-term average of 1,700 homes that we sell a month on the average? Not this month. But as you can see, the green circles, these are peaks. These peaks are always going to be March and April. And you can see lower highs. When you look at the bottom, which the lowest is going to be in January, these are lower again. What I liked about this year is that, as you can see here, these things take steep declines going down to this bottom trend line that I drew. But this one hasn't even crossed past that middle line. So if it's, we may not have the worst January in sales ever, but I do want to note that this is the second worst December by only 40 sales. 40 more homes sold than the worst December that we've ever had in 40 years. So it is still 48% lower than our average. At the time of writing this, interest rates were 0.03 different from compared to last month when I wrote this. The positive trend that we do see here is that this is kind of staying stubborn above 900, which tells me we may not make a lower low, but we are still going to be pretty low coming up here. Of the 909 sales, 71 of them were new construction. That's up 9% from last month. Builders used to get 1 out of 5 buyers. Now they're 1 out of 3 buyers, yet they're only 18% of our inventory. 18 out of 100 homes are new construction, and they're getting 1/3 of the buyers. So that's positive for the builders are attracting. The negative to that is if you're a homeowner and you want to sell your home as a used home, you're losing 1 out of 3 buyers aren't even looking at you because the builders are giving away their homes. But they did increase their buyer grabs. I did the state of Florida, and I thought this was an interesting graph because I'm showing you Southwest Florida here and these down, down, down since 2020. But look at this since 2013, guys. These green circles here are always April and May for Florida. So this is what's called our season. More buyers come during when it's cold up north and they're shoveling their last driveway of snow and they want to come down and get that second home or get that home or move down to Florida. They always tend to do it in these months. And look at the demand, how many homes sold. As these green circles kept going up, 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 right? A little higher, not as steep in 2017 and 2018. Now you see this little crash here. What happened, guys? If you've been watching my updates, you know this. What happened in 2018-19? The government increased the interest rates by a point, and it totally tanked our market. It tanked the whole real estate market. They went, oops, sorry, we'll go back to the 3%. And actually, at one point, they went down to 2% when they said sorry about that, and they corrected it. And then we had this escalating demand all the way up to our absolute peak, which was right after COVID. But then look what happened to these lows. And these red circles are January, which means this is the next month coming up. And then look at how these have kind of just been a flat line. Where do you think this graph is going to go? Do you think it's going to go into the red circle? It has the last 3 years. But you can kind of see just kind of a blip of how our market's been since 2013. Up, 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 up. Hit a peak. Down, 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 down. Fill in the blank. This is kind of getting you ready for the future of real estate with this. So I think putting Florida stats in with our Southwest Florida stats is a good thing. Our prices, because as you would expect, inventory went up and demand is really, really low. So did our median home price. But we did have a $6.9 million home sell on Fort Myers Beach. We did have, we got 85, I have to correct that, 85 homes sold for over $1 million. Last month it was 54. The more $1 million homes that sell, the more this graph gets skewed. Is the real average home $350,000? No. But you only have 900 sales. You have more than half of the normal sales for a given month. These $1 million homes play a bigger picture with that, but lower prices. This kind of signals weakening of the market for the next month. We do have a couple other pieces of data that show this, but normal home prices, at least for the new constructions, right around $340,000. On the used market, they're about $289,000. I did this little graph about. No, it's not really a graph. It's showing you Southwest Florida prices. And what I want to show you is a lot of people have asked me, Ed, where's the big discounts? Where are you getting all these things? I don't see it where I'm looking right now. So I took a few key cities and I looked up what their median home price was in 2019. I looked up what their peak was. Now, everyone peaked at different times, whether it was May of 2022, some peaked in 2023. I took their peak price and what their prices are right now as we speak. So I did put in Northport, and you can see here, average home price in 2019 was $211,000, peaked at $415,000. Now it's at $335,000, a 19% drop from its peak of a couple years ago. Same thing in Venice, a 21% drop. Fort Myers, 282 house, peaked out at 577. Now it's at 425. So if you would have bought in 2023, you would be down $150,000 right now. Cape Coral, you're down about $100,000 if you bought in 2023. But guys, look at Punta Gorda. You would have bought a home for $411,000 in 2019. The peak median house price in Punta Gorda was $1 million, or $1,000K. Now it's 42% less than that. Imagine if you bought in 2022 in Punta Gorda, and now you're almost half off of that. So a couple things I talk about this, because people are like, geez, Ed, 26% is a really good discount. You know, I like that discount. I want to buy right now. Here's food for thought. Back in 2019, the average household in Lee County made $61,000 a year, $5,000 a month. Now the household income makes $84,000 a year, or $7K a month. That's an increase of 40%. The rule of thumb with real estate is if income goes up 40%, then house prices, if everything else stays the same, will also go up 40%. So Cape Coral, for instance, at $241 should go to this $337.4 since Lee County's income went up 40%. But in 2019, what were interest rates? 3%. What were insurance bills? About $1,000. Taxes, heck of a lot less. So if we can go back to 3% interest rates and $1,000 insurance bills, which isn't happening anytime soon, then yes, we are only off by like 10% more of a drop. But when you have double the interest rates and insurance policies are averaging around $1,900, it kind of cuts into that increase. So for me, I think we have to get back to 2019 prices. And then if we do that and then the interest rates go down, well, then there's your best case of scenario on that. That's something that could happen. Unless you can get a rockin' deal and a great interest rate and great incentives and offset this, then really I would say for buyers out there, this data is kind of telling me, thank God you didn't call me during the peak. But let's continue on. The stabilization graph I love just because it shows you, are houses currently losing money? Are we stable yet, Ed? Well, last time we crashed, we went 59 consecutive months of negative home value growth. We're at 29 consecutive months, and I kind of listed each one. And as you can see here, it was getting worse and worse and worse and worse and worse, and then kind of peaked out here at that 128, and then it's kind of going back down. And right now, the home value index, it only lost 0.5% last month. That's 0.5% a month. That's 6% a year. It's a lot better than when you're losing 1.2% a month or 26% a year. So this is something that I take a look at. People will say, Ed, are we stable? Here's all the data you need to know. No, it's under this line. It is not stable. Can it go to the line and reject and come back down? It did it twice in 2010, 2011. It didn't find support at that line until 2012, and then from there it did its normal thing. So let's compare month to month. We had December, we had an increase of housing, but not much, 30 more homes, but we had 1,400 expireds. Remember that. We still gained inventory even though 1,400 homes just disappeared. We had a drop of 3%. The demand, look at this, guys. 1,400 pending sales equated to 909 sales. What do you think 1,152 pending sales are going to equate to? You lost about, 500 homes? If they did that, we will hit the lowest January in 40 years, being under 700 sales for the month of January. This pending sales tells you the future 1 month in advance of what you're expecting for demand out there. And if demand's that slow and things aren't closing, sellers and builders are going to get really, really distressed. And look at what the builders did. They built more homes. This is exactly what they did in 2009 when, the buyers disappeared. We have too many homes. Build more, and that will correct it. And it's kind of happening right now. Some builders are slowing their starts. Other ones are picking them back up because, hey, they can't fail, right? The time on market actually dropped. We did hit the worst in the country a couple months ago, over 100 days on market, but 90 guys is, even though it's down 4%, that's still not great. Median asking price, median selling price went down 3%. Look at the selling price drop, twice that of what the asking price dropped. I thought that was very, tells us kind of a story in itself that sellers aren't getting 98, 99% of their price. They still have to come down more off of their asking price, even if that asking price is actually market value. So this is kind of like the overall theme of what this whole year has been with this kind of crisis, a real estate correction, a reset, or crash, whatever name you call it. I figured they're all synonymous. And remember, I talked about builders with that rising inventory. They don't update these stats until next month. So I'll get this from Fred. But this will tell me exactly what I need to know is whether this builder inventory, we gained more homes in Lee County, but in the South have builders built more home inventory up. I will wait to see when that data comes out for next month. But that's always something that I find kind of blends this whole story together. Builder inventory increasing. Builders have more inventory than they had in 2005. This month's deal, and I want to tell you, thank you to all my YouTube watchers out there. If you're watching this video, I have helped numerous of you reaching out to me saying, Ed, I like these deals you're getting. So let's show you the latest deal from a client of mine that I met from YouTube is Mike. Watches my videos and kind of had an idea of what he wanted. Look at this home. This is a home by Lennar. It is up in a place called Babcock Ranch, which is in Punta Gorda, Florida, just to our north. Kind of what the inside of it is. Here's what the floor plan is. It's about a little over 1,400 square foot, 3-bedroom, 2-bath home. Their sale price, end of the year blowout, was 314,597, and that they discounted 15 grand off what they wanted for the home. This home is on the middle of one of their biggest lakes, and it's southern facing. And for those of you that don't know, most people want southern exposure because southern exposure has the sun all day long. So if you have a pool in the back, your pool's always in the sun. People from up north want the sun. So they did a discount of 15 grand. And they were offering 12,500 concessions towards closing costs. Not bad. It's not enough to cover all your closing costs going into this community, though. It was carpet in the bedrooms, which Mike didn't like. And they weren't not going to include everything you need to move into the home. You need blinds, you need appliances, you need a washer and dryer, you need a garage door opener. Not every new builder gives you all those things. I have had them where they don't give you a fridge. They don't have to give you a garage door opener. They don't have to give you a washer and dryer. They don't have to give you blinds. But we want an everything included thing. So, and this is funny, I always say, when I whispered last month, call them on Friday nights, call them at the end of the month. This was the end of a week that was really, really poor. And I have my relationships with these agents for these different builders who said, Ed, we had the worst sales week ever. Our manager says, do whatever you can do. Sunday is it. So Sunday night, I am stroking this deal out. And I got them exactly where I want them. I said, great, you want to sell this home. You're giving 12 grand. Thanks for that. 15 grand off the house. All right, this is what I want to do. I did my math. What kind of margin does this builder run? What kind of profit? How much money can I get out of them? So what I did, and I worked it backwards, but I want to show you what we end up doing. This 314,597 home, we eventually got down 20 grand off their price to 294. I wanted them to waive the lot premium, which they charged 20 grand because of the southern exposure and the lake. It was one of the only 6 that they had that were on a lake that had southern exposure. I didn't want 4%, 12 grand, 12,500. I maxed that thing out. The most you can get, any lender will allow you to get on loans is 6%, 17,340, an extra 5 grand there. I wanted tile throughout the whole home. This home wasn't even nearly done. I'm talking, it's got a slab and block up. It's not even a house. Builders are really, really motivated when the house is CO'd and done. It's a finished house. They want it gone. This one's not even built yet. And I'm like, hey, since you haven't done the floors yet, he wants tile through the whole home. That option for them is $6,450. I wanted all the appliances, the blinds, the washer and dryer, the garage door opener, move in ready. And then I'm thinking they got some more money. I want you to epoxy the garage floor. They don't even offer that as an option. We threw that in, and I want 1 year of master HOA paid in advance, about $2,100. It was about 3 rounds of negotiation to get to this because I actually started off even lower in price. I wanted more than they could give, and I think the reaction to that was I'd get fired. The boss would get fired if he did that. But I kept whittling and whittling and whittling. I think at one point he said 297, and eventually he's like 290. This is the most we can give. Is all those things with 294. I'll take 20 grand off the house. Total incentives 72,923. Give them credit where credit is due. They were offering up $27,000 of incentives. I wanted 72, an extra 50 grand or so, and so we got 45 grand more just by playing this game, just by being there at the right day, watching football on the phone, negotiating and hammering a manager and trying to hit on his margins. So that's this December's deal of the month. So let's do an overall thing. December, slight increase in inventory, not much, but 1,400 expireds. We still put more inventory on than that, plus some. The pending sales dropped 20%, and that's a huge number, guys, which means that our sales next month are going to be pathetic. Median home price drop back down to $350. The builders get 1 out of 3 buyers, which is going to make that margin between sellers and buyers even harder for the used market to play catch up. That's going to be very, very difficult. Stability has increased for the 4th consecutive month. That's a positive thing. New construction running the show, obviously. What seller out there can give you $72,000 in incentives? Not many. And then standing builder inventory is still at record-breaking highs, so they're not running out of inventory, regardless of what you hear on Redfin, Zillow, National Association of Realtors, or coming from a realtor. Advice for buyers out there is the patience. Wait for your deal. You need to qualify first, find what you want, narrow down your search, find it is, and then we just wait. We wait until they're distressed enough to make the deal happen for you. This is a market of falling daggers. Do not reach. You wait for it to turn into a feather and fall into your hand gracefully. Pick your payment and do not settle. Do not do the it'll do. And I've had a couple clients this month that are like, I kind of like the home. The motivation to want to buy a home is more than the home they're seeing. So they're like, I kind of like it. And I'm like, no, we're not getting a house you're going to kind of like. You will probably regret that decision. You want to buy a house you're going to love and move into. For sellers out there, and I wanted to show this is what I'm talking about, that COVID equity. All right, this is an example. I just took a townhome in Fort Myers and I went back to pre-COVID, that January of 2020, before we even knew what COVID was. These townhomes, this 1327 square foot, they're a little older, but these are all the same ones, same community in Pine Grove. Someone paid $110,000 for that. That was the going rate pre-COVID. Look what happened 2.5 years later. That's one of those same places. I want you to look at the address. The same address, same unit, just next to it, sold for $250,000. So that means that it more than doubled in a 2.5 year span. There's your boom. There's your over freaking out COVID thing. Now, to those sellers who maybe have bought that, or maybe this 240 here, or this 230 here, or the 238, or the 245 in 2023, all of those people paid that much money, and this thing did not sit on the market that long. Look at that, 1 day gone, 0 days gone. That thing sold in the same day it went on, 10 days gone, 15 days gone. But then look what happened as the years progressed down. Now, that same place, look at the address. This same 250 just recently sold for 167. And then here's one for 160. So did sellers lose all their equity? No. One, they should never have doubled in 2 years, more than doubled in 2.5 years. It never should have happened, but it did. And then those who bought then, yeah. So even if you bought in 2020 pre-COVID, you still got $60,000 equity, which is still a heck of a lot better. Over a 5-year span to go up 60%, that's still outrageously ridiculous. So for you sellers out there, when I talk about the depleting COVID equity that you gained, that's COVID equity, 110 to 250. Then you go down from 250 down to 160. That's still equity that you probably didn't deserve. And if I think that we're going to go back to 2019 prices because interest rates are not going to 3 and insurance is not going back down to $1,000 a month, then it's probably going to go back down to $110,000. So sellers, I am telling every seller of mine, I have sold, as of right now, I have sold every one of my listings. In December, I sold all 6. So I have no listings to market, which is killing me right now. But I had every one of my sellers. We did a pre-inspection to show buyers that they don't have to do many repairs. We offered our concessions, our buy downs. We're marketing it differently. I'm almost doing it exactly like the builders are. You got to price yourself accordingly to the market, though, because this one that I sold, this is mine, I sold for $160,000. 300 days, because they were always $10,000 higher than I was telling them to be. But at the end of the day, when this one came on the market for $175,000, and if you looked at these two, there's the same address side by side. That one was remodeled, had porcelain floors, and we didn't. We were more 1980s, and they were definitely 2025 as far as their upgrades go. To only get $7,000 less than that, that's actually pretty good. And then market your home differently than the competition is what I tell people. That's just trade secrets that I do to get my listings sold. And so, of course, the data, the tons of data that I pull, I show all my graphs. It's where I get everything. If you want to pause the screen. And guys, have a very happy 2026. Happy holidays, past tense. And I hope we have a great 2026 coming up. I'm excited to see what this market has in store. I'm excited every month because January is going to be a big month. Are we going to hit 600-700 homes? It's almost like a big drama playing in front of you. And I wish I could just tell you, this is the best time to buy a home, guys. Hey, guys, we're stable. We're affordable. What's the problem? I remember doing that in 2012. Guys, houses are 70 to 80 grand. It takes 300 grand to make them. You're buying it assembled cheaper than to assemble it by 60%. And you know how hard it was to sell someone a $100,000 home back then? The interest rates were like 7-8% or so. It was super difficult. Wasn't difficult to sell people $400,000 homes, same home. but it was super difficult to sell them at 80, 90, and it's not until things kind of level off and buyers get, patient, but they're also very conservative too. This is kind of what a lot of you, hopefully, that are watching this are getting into. Guys, thank you so much. My number, my cell phone, my email. You can catch this whole market update in this PowerPoint over at LeeCountyMarketUpdate.com. I wish you all great. I'd love to hear in the comments. Just put in there a happy holidays for 2026, or congratulations, Mike, on getting that crazy Lennar deal. Talk to you guys later. Bye-bye.